Hello, everyone, and welcome to this presentation on solutions for uncertain times. My name is Jason Lee, and I'm the Director of Wealth Services at SIA Wealth Management. Just a disclaimer, the information provided here is solely for illustration purposes and does not constitute a recommendation to buy or sell any investment. As always, please do your own due diligence. Our clients continue to ask us about their need for tools and product solutions that can enhance their ability to navigate the full market cycle in these uncertain times. So this is a brief introduction to two solutions that were designed for times like these. To start, a quick look at the current market environment in terms of sentiment. The Nasdaq CFTC net long speculative positioning is at all-time highs. This suggests high conviction and possibly even a little bit of overconfidence at this point in the market cycle. This should give all investors a reason to evaluate their current investment strategy to determine if they are prepared for a reversion of this optimism. Secondly, the major story of 2023 was the impact of the Magnificent Seven stocks. The returns were huge last year, and now the combined market cap of these seven stocks is greater than any single country outside of the US. So at a time when the net speculative positioning is at all-time highs, we're also experiencing unprecedented levels of concentration in market cap weighted indices. In addition to this, all Magnificent Seven stocks except for Microsoft have a beta greater than 1 currently. So the major indexes are becoming more concentrated, and the stocks responsible for this concentration are higher beta stocks. The rise in concentration increased dramatically last year as the Magnificent Seven went from 27% to 40% allocation in the S&P 100 index and contributed 26% of the total 33% return. The opportunities for greater returns and the possibility of greater risk may lie ahead, and hence why we continue to beat the drum about the importance of an objective tactical asset allocation strategy going forward. So let's take a look at two solutions that we've designed for uncertain and volatile markets. First is our BMO SI Focused North American Equity Strategy, which is available in both mutual fund and ETF versions. This is a high conviction, highly concentrated, 15 stock large cap North American mandate. It invests in the strongest relative strength large cap stocks in North America. It also has an equity fixed income allocation range between 0 and 100%. So it could be 100% allocated to equities or 0% allocated to equities, depending on our proprietary risk management overlays at SI Wealth. Here are the quartile rankings according to Morningstar.ca as of February 5th, 2024. Over the past 5 years, which included 2 bear market declines and 3 bull market advances, this fund has achieved top quartile status over 1, 3, and 5 years, and currently sits in the top percentile year-to-date 2024. As proud as we are about our absolute and relative returns, we're more proud of our risk-adjusted returns because our goal from the beginning was to develop solutions that could successfully navigate the full market cycle. Our alpha of 4.44 compared to a category average of minus 3.38 demonstrates the volatility most equity strategies experienced during the 2022 bear market. And our beta of 0.35 was less than half of the category average of 0.78. If you're looking for a low beta equity strategy that at the same time is a high conviction, highly concentrated stock mandate, we believe this is a truly unique offering in the industry. The second mandate is our BMO Tactical Global Equity ETF Mutual Fund, which is a global mandate consisting of a concentrated 5-stock North American sleeve combined with sector ETFs and broad-based index ETFs across Canada, US, and international markets. It can also be 100% invested in equities or 0%, again, based on SIA Wealth's proprietary risk overlays. This fund is within the tactical balance category on Morningstar because of its history of significant asset allocation shifts between equity and fixed income. It currently ranks within the top decile over 1 and 5 years and top quartile over 3 years, and currently is in the top 2% year-to-date 2024. And again, its risk-adjusted returns demonstrate its successful navigation of the bull and bear markets over the past 3 years with an alpha of 2.16 versus minus 0.76 for the category and the beta of 0.59. We see 3 specific applications for how most of our advisors use these 2 mandates. First, for smaller accounts, that don't meet your minimum investment levels, you can still manage these accounts with the same relative strength focus and bear market risk management overlay as you might if for those who use the SIA charts system to manage their larger accounts. Second application is as a sleeve in your larger accounts to create an automated tactical asset allocation strategy. For example, a 20% sleeve in these mandates in your 80% equity, 20% fixed income portfolio would automatically shift to a 60% equity, 40% fixed income portfolio if our mandates were 100% in cash because of a risk-off scenario. And third application that we see most advisors use these two mandates for is to reduce your trade counts. Since our mandates will likely de-risk and move to cash in the event of a prolonged bear market decline, this could enable you to maintain your other holdings instead of having to sell some positions to reduce your equity weighting and position the portfolio more defensively. If you're interested in learning more about these mandates, please don't hesitate to reach out to us via our email address, siateam@siawm.com. Thank you.